there's a good chance we're going to go into recession on this. We're going to have negative GDP in the second quarter, I would guess, and who knows about third quarter yet. But so I think you're going to have, as you move forward in the next weeks and a couple months ahead, you're going to have weaker economy. I think it could be explosive in terms of, again, it may not last, but for a period of time, we could go from a narrative that says, oh, wow, Trump is blowing up the world and this is going to end up in a depression, to, oh, wow, he's actually negotiated some good things here. We're looking at freer trade around the world, and things are going to actually boom out of this. Whether it happens or not, that could be the narrative for several months.
You're watching Capital Cause, and my name is Danny, and today's guest is David Hunter. David, thank you for coming back on the show, my friend.
Yeah, hi, Danny. Great to see you. I think we are right on the, there's so much going on. This will be a fun one.
Yeah, we scheduled this interview actually, I think like a month and a half ago or 2 months ago ahead of time.
I think it was January, actually.
Yeah, we scheduled it back in January, and little did I know that we were going to have all of this spicy content to talk about as it relates to the ongoing tariff wars. The markets are extremely volatile, and it's been an extremely volatile week. But I want to get your take here. Is this the end? Is this the really the beginning of the big market crash that we've all been kind of speculating on here on alt finance? Or is this can we see greener days ahead? So I want to get your take on all this here, David. But before we get started, I'd like to remind you guys to hit that like and subscribe if you haven't already. It's a small and easy way to support the channel, and it really does go a long way. All right, David, I'll let you take it from the top. What is the most topical? Obviously the market crashes, but is it the trade war with China? We have this 104% tariff that's been enacted on China. China retaliated back with an 80 some odd percent tariff. How do you want to kick things off? What's the signal from the noise here?
Yeah, let's address the trade negotiations first, and the tariffs. Obviously, Liberation Day didn't quite liberate anybody, but I think what we saw in reaction to that was a huge overreaction. What Trump is trying to do is not easy. It's reversing policies that have been in place for 40 years. When I was in college and taking economics courses, there was a theory out there, basically comparative economics, comparative advantage. And the theory was that you allow production to go wherever it can be done most efficiently, and you do other things. So, if somebody else can make steel cheaper than the U.S., let them do it. If somebody else can make iron ore cheaper than here, or aluminum, which takes a lot of water power, let it happen. And ultimately, that was used over the last 40 years or more to basically watch us lose our industrial base. Wall Street loved it because basically we were able to farm that stuff out elsewhere, keep the ownership here. The companies were, most of them, based here, and then they had production facilities around the world that were, far lower cost of production, and they made lots of profits on it. And people were not the wiser by it, because they said, hey, look at, America's doing fine. These Wall Street's booming. This is okay. And Trump, I think, is coming in recognizing, and he's not the first one to recognize it, but he's really the first one to do anything about it, recognizing that what we did was we gutted middle America. We destroyed the auto industry, we destroyed the steel industry, we destroyed a lot of heavy industry in this country, among other things, in farming it out, textiles certainly. And the consumer benefited from getting cheaper product. Walmart benefited from selling cheaper product. But we also saw our cities decay. We saw huge drug abuse, drug use. And as middle America basically went from, solid middle citizens earning good livings to where they had to go and be a greeter at Walmart or whatever, and or at least make far less wages. And our cities declined. We had a lot of crime in those cities because of particularly unemployed males. Um, and I think what Trump is seeing is, and what also happened was we had a huge. I mean, people really should step back and look. A huge buildup in our government. We, both state, local, and particularly state and federal, and particularly federal. And through all that government spending, we were able to kind of disguise the fact that without that, we'd be seeing a decline in our standard of living for most people. As it is, we have a have and have not economy where half the people in this country live paycheck to paycheck and basically are trying to put food on the table and make sure they have a shelter over their head. And beyond that, they don't have a lot. Whereas those at the top end, particularly the top 10%, they don't have any worries. Everything's great. Stock market until this past week or two was at all-time highs and is up, 20, 30 fold in the last 40 years or more. And obviously real estate's gone up, et cetera. So those people are doing fine, but our country is getting more and more bipolar, and there's a real problem if more than half the country is sinking and losing standard of living while the other half is doing well. We kind of disguised that by all this government spending, a lot of obviously welfare and other entitlements, et cetera. But what Trump is understanding, I think, is that we're at the point where that can't continue. I mean, we can't afford our debt as it is. We can't finance our debt if rates go much higher. And so I think that spigot is going to get shut off pretty much. And meanwhile, unless we bring back industry to this country, unless we restore production facilities in this country, just being a service economy is not going to make it. You're going to continue to see us decline. And frankly, from a national security standpoint, we could not do what we did in World War II. We could not shut down our private economy and say we're going to a wartime economy and building tanks and planes and missiles and everything else we need. We just don't have facilities or the materials anymore. So he is right to understand that we've kind of closed our eyes to this for far too long, and it has to be reversed. The problem is reversing something like this after 40 years is near impossible. It's certainly very difficult, and to do it in the time frame he has to do it in, because he's pretty much the only one that is willing to do this and take on the crowd. He's the only one with the backbone, I think, of any politician we've had in the last 40 years that is willing to take the flak and be called an idiot for doing this, et cetera. Most of our politicians don't have that kind of constitution. So I think he has a couple years to accomplish a lot, and he's trying to do it. Now, in the process, it's messy. In the process, it's scary. In the process, people panic, particularly on Wall Street. But I think if people step back and understand what he's trying to accomplish, and if they understand what he understands, which is that he holds the cards, our market is by far the largest market in the world, and everybody wants a piece of it. Everybody's trying to sell into our market. Meanwhile, we've been closed from China. We've been closed from a lot of markets, so we don't have nearly the same problem if they shut down their access to their markets. He understands if you're playing poker, he's got the hand, and they're as somebody, I think Bassett may have said the other day, China's holding a pair of twos, and so we have the leverage. He can basically say this is what we're going to do. Now they have other levers they can use, and they're trying to use maybe like maybe sell some of their treasury bonds or do things, but ultimately, I think he's trying to force people to the negotiating table. In the end, I think his goal is to have lower tariffs, to have a freer, I know it is, to have a freer trade world, and he's trying to get that done. But he also knows that it's going to take some time and there's going to be some pain. The problem with Wall Street is they shoot and ask questions later. They look and they say, this is insanity. We were rolling along, everything was fine. Why is he disrupting things? Well, you have to go through this to get to the other side. And in the meantime, it obviously caused in the last week, a lot of turmoil, a lot of dislocation, a lot of lost money in Wall Street. But I do think we're searching for a bottom there, and I think we can talk about that in terms of where the market's going. But I think people need to understand this isn't as insane as all the speculation out there tells you it is. There is a method to this madness. There are a lot of countries that are understanding what has to be done, understanding they don't have the leverage and are willing to negotiate. And just you gotta kind of let it play out is what I keep saying to people on X.
Right. Isn't another objective to also try to bring down interest rates too in the process? And despite that, it seems like we're seeing sell off in the bond market. I'm looking at the 10-year right now. And last night, it hit a whopping 4.5% after dropping, below 4 earlier in the week. What's your view on this? Is why I mean, why are bond yields spiking in a time where they should be coming down? Is there a foreign seller in the market trying to tit for tat Trump, or what's your view on this?
Yeah. So keep in mind that this is true across all markets, not just the bond market, also certainly stocks. Um, there's a lot of rumor and speculation going around, and there are all kinds of narratives out there. There was a narrative that um, Trump and Besant were trying to push the stock market down to get treasury rates down so that they could fund the deficit. That this was all deliberate, that he wanted the market down, he wanted to crash, and he's trying to get interest rates down. I think that's a false narrative. That's not it at all. Um, Certainly, Besant said a couple, 2 or 3 weeks ago that the goal is to get the 10-year rate down. That's much more significant than Fed fund rates, which control, which are the overnight rate for interbank lending. The 10 years, what mortgages are priced off of. A lot of loans are priced off the 10-year. So moving that down is good. I don't think that the government is why the rate's going to go down, and I don't think it's why the rate's going up. It's and the other speculation that's out there, the big one, is that China, in retaliation for what Trump is doing on the tariff side, is dumping their bonds, dumping all their treasuries. I don't, I don't have any way to know whether that's true or not, but I know that what we're getting out there is a lot of just rumor. Um, what I think happened now, 2 weeks ago, maybe less than 2 weeks ago, the the 10-year was at 437, and I had said probably 3 weeks ago now, I had said there's a clear head and shoulder top on right shoulder on the 10-year at 440 to 450. 450 was the kind of exact right side of a head and shoulder. 440, there was a gap. It had gapped down from 440. So I said it's going to probably go. And this was when the rate was down it was under 420. Um, and I said it's probably going to go back to at least 440. It might go to 450, but I'm not chasing yields down here.
You're looking for great deals on gold and silver coins and bars from a company that you can trust, then you've got to check out the good folks over at Pimbex. This year, I've really gotten to know these guys, and all I can say is you're not going to deal with a better group of people. They're a family-owned gold and silver online bullion company offering the essentials and more at industry-leading prices while always providing first-class top-tier service. That's PIMBEX.com. And if you're looking to convert some or all of your retirement account into real gold and silver, give Pimbex a call. They'll help explain the process and get you started on the right path. Your support at Pimbex also helps support the channel. So reach out to Pimbex today. You won't be disappointed. And make sure to tell them Danny sent you.
Give it time. It just had moved down quickly from 435 to 419 or something. And it's sure enough, it went back. I think overnight it might have touched the 440, but on the charts it's like got up to 438 or 9. So it just missed that gap. And then we got the tariff story, and it fell all the way down to, like you said, just below 4%, I guess. And then in the last, this week, has backed all the way back up, and overnight, as you said, went to 450. So it went right up to that right shoulder. That's a weird shoulder because it went below the neckline and then came back into it. So I don't know whether you call it a head and shoulder still or not. But I think all this move was filling in that right shoulder, was filling back in where it had just about been, and even ignoring the chart pattern. It was almost 440 a week ago or a week and a half ago. And, it's below 440 today. So, I think people got too caught up in the day-to-day movement, and particularly chartists and particularly traders. And all of a sudden the word out there was, China's dumping their treasuries. We're going to 5%. Maybe we're going to 6%. And I keep saying my call on bonds is that we have pretty much seen the highs on rates or are forming that top in rates, and that over the next 6 months you could see below 3%, maybe even 2.5%. So I think rates come down. Certainly what Trump is doing and what's going on with trading partners, there's a good chance we're going to go into recession on this. We're going to have negative GDP in the second quarter, I would guess. And who knows about third quarter yet. But so I think you're going to have, as you move forward in the next weeks and a couple months ahead, you're going to have weaker economy. Oil just went to $55 and dropped $17 in a matter of days, 6 days. Mm-hmm. And so you can have lower gas prices, lower oil prices. So inflation, I don't think everybody's worried about tariffs and the impact on inflation. I think that's more than offset by a weaker economy and big drop in oil. Housing, I think, is because of this bounce back in rates. It was already weakening. This is only going to prolong that weakness. Now, as rates come down, you could get a bounce in housing, but for the next several weeks and months, a couple months, that it's. I think you're going to have a story that has inflation rolling over, not going higher. So that means by May, when you get to the Fed's meeting, you might actually see the Fed cut. Because I think the economy is going to be weaker, inflation is going to be lower. And you got turmoil. So I think there's a decent chance, Powell's certainly not indicating it now. And it's very possible that, the Fed's going to stay in their kind of wrong-headed worry about inflation when they should be worrying about, I think, a bust that's coming down the road. Mm-hmm. But I think there's a decent chance that we could see a rate cut in May. Not before. We're not going to have an emergency cut or emergency easing, I don't think. But I do think when the May meeting occurs, I think we could have a vote for a rate cut.
Interesting that you mentioned that we could still see a global bust sometime down the line, kind of implying that what we're in right now is not part of that global bust. So you don't think that's the case?
Yeah, great point. Yeah, I have, and everybody knows that I've been calling for a global bust for several years. I'm not saying it's, my forecast was never that it was imminent. I was always saying we have to get through the end of the cycle, and then on the other side of the cycle, I think we're going to have a global deflationary bust. we're getting ever closer to it. I still think it's possible we get it by the end of this year, and it may come out of some of what's going on here, because certainly, even though I'm predicting a big recovery in the market and everything, there's damage being done while we speak, both here and abroad. So it's possible this will play a role in it, but I do think what we'll see is a recession begin maybe even in the second quarter, and it might bounce back up from that, or it might just keep going lower and ultimately morph into a bust. And the bust could start by the end of this year, is possible. Doesn't have to. It could prolong a little bit, but ultimately, I think we are heading for a global bust. And I define a global bust as something we haven't seen in 90 years. It's basically 2008-9 on steroids, where we actually go over the cliff, where we kind of pulled it back from the cliff in 2008-9. And it means big financial crisis around the world, big bank failures, probably in other places more than here, Asia, Europe. Canada's got their banks are in far worse shape than they were back in 2008. Australia's got a huge leveraged real estate situation in their banks. So there's other places that I think are more vulnerable. Our banks are going to get hit hard too. It's a small world. So I think you could have potentially the biggest financial crisis in history, which would mean bigger than 2008-9, as early as late this year. Like I said, it doesn't have to be in the fourth quarter, could be first quarter next year, what have you. But I think we're not far away. But this is not it. And people mistake. They see the term bust, and they think I'm talking about the stock market. There will be an 80% bear market, in my opinion, accompanying that. So the biggest bear market since the 29 crash. But bust refers to the economy and the financial system, but it'll be accompanied by a bear market that will be pretty historic.
Could this trade war between the U.S. and specifically China escalate to a point that no one's really anticipated? Again, we have seen reciprocal tariffs on top of reciprocal tariffs now. It's 104% on the part of the U.S. to China, and China's now raised their reciprocity to 84% tariffs. And now you're getting things from Scott Bessent saying that maybe we should ban Chinese companies from our stock market too. So
yeah,
from a games theoretical perspective, is China more inclined to keep escalating, or is this just one big game of chicken between the two sides?
Well, it certainly seems like that right now. And you've got, two big powers and two big egos going at it. She isn't inclined to back down from anybody either. Trump certainly isn't inclined to back down. But I think Trump's, and everybody can point to personality and everything, but I think Trump's process is rational. It's basically understanding we hold more of the cards, and a lot more of the cards. The problem is, it's a communist country you're dealing with. She is probably going to try to find other levers and do things like the treasuries are certain, selling the treasuries is certainly one thing. But how many options does he have? And I keep hearing from people within China saying he's not as, everybody kind of assumes that, we're the open society and we're the, Trump's the vulnerable one. But they say over there, she's got a lot that he's got to be careful about. They're already in a recession. They've already got a huge real estate problem on their hands. A lot of their industrial capacity has, slowed down a lot. They're in danger of actually having negative GDP, which years ago we were told if they ever. So I'm not sure that he has many cards, and he's playing what he can. It's unpredictable and uncertain in terms of how this will all play out. My guess is ultimately there'll be negotiations, and ultimately both sides will recognize at some point that they can reach a common agreement in a way where we both win. China's not going to have probably the free access to our markets, of course, that they had, but it doesn't mean China's going away and they're not going to be able to have, decent access here. We need things from them. They need things from us. I think ultimately cooler heads will prevail, but right now I don't think it's a hothead in the form of Trump that's playing this game. He's playing poker. I mean, he's this is not the one thing people have to step back and look at honestly with Trump. He everybody wants to portray him as kind of a guy that will never back down, a guy that is all ego and all superficial ego, and that's not what it is. He understands the art of the deal. Now, maybe the other side has read that book and says, "Oh, I know what he's doing. I'm not going to fall for it." But you don't have the cards. So I still think in the end, if people let this play out, it's not months away. I think you'll see um, the narrative will turn from, oh my God, we're blowing up the world, to actually there are several trading partners that have already negotiated deals. It looks pretty good. Others are starting to join in, and China and Europe are playing hardball, but they can't do that for much longer. I think you could have that kind of a narrative before this month is out.
Yeah,
And
especially. Go ahead.
and just to be clear, that doesn't mean the market waits for that. The market will anticipate that. I think as they see, as we've seen already, the last couple of days, if there's any word that there's negotiations or that some of the countries are coming around, this market starts to move. So it doesn't take China and Europe; they're kind of the last ones to fall. I think you'll see this market reverse maybe this week. I mean,
Mm.
we're certainly trying to find the bottom here. I don't know where it is now, so famous last words. But yeah, I think we're in a bottoming area, trying to find a bottom. It doesn't mean it's straight off to the heavens, but I do think we're bottoms are a process, and I think we're near bottom, if not at one. Have probably seen the lows, and a reversal is not very far away.
Yeah, especially you mentioned Europe. Europe just tacked on a 10 to 25% tariff, retaliatory tariff to our tariff. And from a European standpoint, do they really think they can? I mean, what cards does Europe have in this regard from their perspective? Like, because I can't really. I'm not trying to be mean to Europe, but what cards does an entity like the EU truly have
Yeah,
to
well,
stand up?
Prime Minister Maloney is coming here to negotiate a deal with Italy. I can't imagine Germany's going to be content with all of the market dependence they have with BMW and Mercedes and Volkswagen, et cetera, among other industries. I can't imagine they're going to be able to sit back and say, "Hey, we don't need them. We'll sell our cars elsewhere. We'll sell our goods elsewhere." So I think the ECB, or the not the ECB, but Euroland has to worry that they may not be able to hold um, Euroland together. I mean, at some point these countries may say, "What are we doing?" So I think it may be easier in China as a dictator to kind of play hardball. I don't think Europe's going to be able to do that for very long. Maybe they're trying to get the best deal they can by playing hardball for a little bit, but again, I think they fold before China folds.
Yeah, and Europe's already kind of on Trump's shit list. I mean, sorry for the language, but I don't. I mean, I just don't see the strategy like the long term strategy here, because it appears that it's only a matter of time before they do fold,
And
and they're just
again, I
taking.
think people keep thinking if we win, they lose. If we go back to a freer trade world, free trade policies, where not only do we drop tariffs way down, if not eliminate many of them, but we also start saying, hey, some of these trade barriers are really, the whole world can grow more if we get away from this. And there's things that you're going to benefit from this too. I think it could be explosive in terms of, again, it may not last, but for a period of time, we could go from a narrative that says, oh, wow, Trump is blowing up the world and this is going to end up in a depression, to, oh, wow, he's actually negotiated some good things here. We're looking at freer trade around the world, and things are going to actually boom out of this. Whether it happens or not, that could be the narrative for several months. And that's why I'm still not, that's not really the only reason, but that certainly is part of why I think we can still, have a final parabolic melt up into a much higher high.
But isn't there still a decent chance that we could see, some sequence of unintended consequences from these actions that could potentially spark the global bust, maybe as a result of this? Could the global bust manifest itself because of the trade war that we're seeing now?
Yeah, that. If there's anything where I think Trump and Navarro don't understand, it's that, yes, the bigger picture you're doing, I understand why you're doing it. You're doing the right thing. What we can't really know yet, and certainly there's a risk, is in the meantime, if enough things get disrupted, companies get hurt, it may be harder to come back from it. And when that happens, along with central banks not understanding what they need to do because they don't want to repeat the mistakes of the past cycle, so they say we're not going to print money like we did in the past when it really is needed. That's why you get a bust. That's what I think is coming. And so, some of the uncertainty that's created here, and we talk about it from it's kind of the whole Musk Navarro feud. We talk about it from a big picture standpoint. Navarro can talk all he wants about the ultimate goal, and you just have to kind of let it play out. Well, some of that takes a long time, and in the meantime, there's a lot of fallout. Companies can't survive on theory, and
Yeah.
so Musk is right. He's saying he may not be saying specifically this, but he's certainly worried. You know, you do this to me, I got a lot of my engines or my batteries and things coming from elsewhere, and yes, I'll adjust to it, but I
Yeah.
can't adjust to it in 3 months. So hopefully, when these negotiations happen, that's all factored in, and I think a lot of it will be. So that's why Wall Street goes to the worst case. Oh my God, if they're gonna do all this, they're not understanding. We're gonna lose companies in the meantime. We're gonna have companies' earnings go through the floor. Well, if there's a period of time where you're trying to get everybody to the table, where you gotta hold fast and talk tough. Once you get to the table, um, you can say, well, this isn't going to all play out in the next 3 months. This is as long as we agree to the plan and sign on to the plan, and everybody's on board. We can give it some time to actually, to deal with the friction points. So I think that will happen, and that's the problem. Is Wall Street shoots first. I mean, shoots first and thinks later.
Right. And whatever your view is on the trade war and the corrections that we've seen so far, I think one thing that we can all agree on is, my God, gold is indeed acting like a safe haven asset during this time. I want to get your views on gold. Currently at 3,100. It did take a little bit of a haircut, but from a relative basis, gold held up fairly well. I mean, it's exactly as you would expect from a safe haven asset. So, what are your views on gold, and then broadly speaking on the precious metals in general, including silver?
Yeah, gold on a monthly, I don't think it even undercut the March lows.
Mm-hmm.
So, we've gotten up to where it was, 31, almost 3,200, I think. And
Mm-hmm.
so it came back under 3,000, but it really didn't undercut the March lows. And now it's turning back up again. Gold looks great. I actually am raising my target, which had been 3,400. My letter came out today, significantly higher. I leave that to my subscribers, so I can't say the number at this point, but I raised my gold target for sure. My silver target is 75, and that's I kept that the same. It's a long ways from here still. Gold obviously is the safe haven, as you say. It factors into uncertainty, et cetera. It's a place where people do look to kind of park. Silver is a much more volatile metal that's can be disrupted by the economy, et cetera. So silver is a little harder, but even silver looks okay here. It traded all the way up to 35, and then after Trump's announcement, traded down. I think down through certainly through 30, down into the low 29 area. I think. I think you're going to find both metals will do very well. As I've said, I'm extremely bullish right now of the stock market, the bond market, and the metals market. I think all three are going to do very well. If you look out the next quarter, the next 2 quarters, I think you've got huge upside in all of those.
Interesting. Well, this has been a fascinating interview here, David. Anything else that we haven't put on the table yet that you want to talk about before we sign off here?
Yeah, the one that's kind of gotten forgotten because of all the excitement out there is oil. I mean,
Hmm.
oil, as I say, back in 2022 when Russia invaded Ukraine, oil spiked from below 100. It was 85 to somewhere just over 85, I think, spiked to 130 overnight.
Right.
And at that point in time, there were a lot of oil analysts saying it's going to 150, it's going to 200, and they continued that viewpoint for the next few months. Right when it was 130, I didn't see the 130 coming, but right there, I said, "This is a high water mark. It's going down. It'll go back to 85 at some point." And then as it broke 100 and started towards 85, I lowered my target to 60. Well, we hit 60 overnight, or a couple days ago, I guess. And overnight, last night, it went to 55. And I think I was the only one anywhere close to that kind of a call. Everybody else, most of Wall Street was still looking at energy as a kind of a safe haven and a place to, buy that oil would, in spite of Trump's policies, would go up. Obviously, Saudi Arabia changed the story. But I've been saying 60 for month after month after month, and probably said it on my last interview with you. I just want to point out to people we're there. I would presume from here we bounce, and we're in a trading range between the mid 50s and maybe the high 60s until the bust. And the bust, I keep saying it's going to 30. Um, and then post bust, it's a little early to talk about, but post bust, because ultimately, even though I think central banks will drag their feet in responding and will get the bust, ultimately they won't have a choice, and we will see a money print unlike any money print we've seen, even bigger than 2020. Could see the Fed increase the money supply by 20 trillion, and likewise proportionally around the world. That will jumpstart a big commodity cycle. The other side of the bust. The bust might last 12 to 18 months. So by late 2026 and 27, I think commodities will be turning sharply higher. And I think by the early 2030s, you could see gold at 20,000, you could see silver at 500, and you could see oil at 500. So if you see 30 in the bust for oil, once you see that, or once you get through the bust, I think oil is going to be a huge story on the other side. I always point out to people every cycle has different leadership. So you end one cycle and the leadership that got you there becomes kind of the laggards of the next cycle typically because they get hit hard in the bust. Everybody owned them. For example, right now technology, they get hit so hard in the bust that every time they lift their head, there's another layer of sellers that say, I want to get out, whether it's at cost or just to get out because they're frustrated. Um, so you have a long distribution period. That's what happened in the early, from the early 2000s after the dot-com bubble until probably 2010, I would guess, is the tech, the dot-com and all the big tech, Microsoft, et cetera, they spent almost a decade, or certainly 7 or 8 years, working through that distribution. That's what you'll see of the leadership that we have this cycle. When we go on the other side of the bus, they will. It's not that they won't go back up out of a trough, but they're not going to go to new highs easily because they have a lot of overhead resistance. Meanwhile, oil, which has not been a big player in this cycle, will be a huge beneficiary, as will most commodities in the next cycle, because of all that money printing that leads to a huge demand cycle for industrials, but also industrials as we reshore will demand commodities to build, steel and iron ore and tin and et cetera. Um, so you'll see a huge commodity super cycle, and oil will be part of that. So people just need to kind of understand the bigger picture, not get caught in these, I call it myopia at this point. The day to day, week to week stuff. It's like this will pass. You just have to kind of take a deep breath. Hopefully, not be too margined, and you'll get through it. And on the other side, there's first the melt up, then a bear market, a historic bear market, and bust, and then another cycle after that with whole different leadership.
Yeah. Well, it seems like you've laid out the chart and the map really well. So for anyone that's interested, that route is already charted out. So much appreciative of your time here, David. Where can people find you if they want to hear and see more?
Sure. Yeah, I'm on X every day. I still have a hard time not calling it Twitter, but I'm on X every day. I get people on there saying, how come you're not here when all this is happening? We could use your voice. And I'll go, that's your problem in your settings, because I'm on here. I'm responding to 100 people a day these days.
Yeah, I see it.
Yeah. So if you're not seeing it, it's because your settings aren't set for replies. Most of my communication is replying to other people. So I'm on there every day. My handle is at Dave H. Contrarian. As somebody pointed out, I haven't seen him in a while, but somebody pointed out the other day a fake account where somebody had changed contrarian to contrarian, so they had an M instead of an N, and they had, I don't know, 400 or 500 followers, but it had my picture, my profile, and lots of my quotes.
That's
You
a sign
just
you've
have,
made it big. You've made it big, Dave.
yeah, that's right. When you have, I've got 215,000 followers. When you have big followings, as many do out on X, people want to, put up fake accounts and try to. I don't really understand what that game is, but they do it just to be a nuisance, I guess. Maybe some of them make money doing it, but just realize I have 215,000 followers. So if you see an account and it looks like me, just check the followers. And if it's, less than 1,000 followers or a few thousand followers, that's a fake account. I only have one account. So you can find me there. I also put out a quarterly letter. I just put it out today. My second quarter letter went out today. It comes with a price. It's a subscription, but if anybody has potential interest, they can direct message me on X, and I will provide details.
Excellent. We'll have the link to all that stuff down below. So be sure to check it out, guys. Also, I'm always looking for ways to give you guys the best deals and discounts on some of my favorite products. And that's why we have a special $1,000 discount on one of my favorite newsletters, Capitalist Exploits, as well as Gerald Salente's Trends Journal. That's a 10% discount for Trends Journal, either of which both of those links are down below. So if you are interested, be sure to check those out as well. David, thank you so much for coming on, guys. Thank you for watching. If you'd like to support the channel, be sure to hit that like and subscribe. Comment "Go, Dave, go" in the comments section. If you agreed with Dave's analysis, if you disagreed with anything, that's fine too. Let us know what you disagreed on. We do read the comments. And so with all that said, finally check us out on Substack, capitalcosm.substack.com, where you get early access and ad-free versions of all of my videos, as well as uncensored versions for the ones that warrant it. And so Yeah, that's all we got for you today, guys. I hope you enjoyed it and stay strong. See you later. Bye.
Thanks, Danny.